In this video, I will show you 4 best stocks that were mentioned and analyzed by Tom Nash, Charlie Chang, Daniel Pronk, and other investing YouTubers. In case you find this video helpful, don't forget to subscribe and let's just get right into it. First stock is Facebook, ticker symbol FB. Facebook is now trading at about $220 per share and has recently dropped about 30%. TipRanks analysts see about 51% upside potential over the next 12 months for Meta stock. First one, Charlie Chang includes the stock in his top 7 stocks to buy in February. He goes over key numbers, recent news, and why he expects them to grow. Charlie thinks Meta could continue to drop for the next few months, but the company is undervalued and now it's a good time to buy more shares. Charlie also has faith in the matter as a long-term hold because the company is already so durable and is obviously looking to the future and tech, and he will definitely be dollar cost averaging the stock. In Griffin Milk's video, Facebook is named as one of the destroyed stocks. He explains why Facebook has dropped so much and is also overviewing recent reported financials. In his opinion, if investors are looking to hold it for several years, it could be absolutely a bargain price right now. Griffin will be adding to his Facebook position once we see concrete signs of bottoming out and reversal momentum to avoid buying a falling knife. And finally, a very lengthy video by Daniel, who did a ton of deep research into Facebook in this video. Daniel thinks that Facebook is just ridiculously cheap right now, and it kind of feels like a no-brainer. Facebook as a company is still continuing to do well, the revenue grew incredibly well year over year, and the free cash flow also grew year over year, so the company is just an absolute cash flow machine. However, Daniel thinks that Metaverse does add some speculation to this company, so he's not going to make this a very huge position in his portfolio, but he is still buying more shares of Facebook. Next stock is PayPal Holdings, ticker symbol PYPL. PayPal is now trading at about $115 per share and is still going down, not being able to find the bottom. PayPal has dropped more than 60% from the all-time heights. TipRanks analysts see about 61% upside potential over the next 12 months for PayPal stock. In this Tom Nash analysis on TipRanks channel, Tom explains why PayPal is still very important in the e-commerce business, also going over financials, numbers, and more. In his opinion, this company actually has a reasonable valuation and has very healthy financials. He foresees a bumpy road ahead for investors because they have to get over this massive loss of eBay, but we can already see the beginning of these new doors opening up with Amazon. Tom thinks that PayPal is a good buy opportunity at the moment. Daniel from Unrivaled Investing is analyzing recent PayPal earnings and recent news. In his opinion, PayPal is still a very strong business, significant free cash flow, huge net cash balance sheet, the large buybacks, secular growth tailwinds, and inflation protection. Looking at PayPal's valuation, Daniel thinks that it trades at a reasonable price but doesn't have a crazy compelling valuation. He would personally be more interested in revisiting PayPal closer to $100 per share, maybe even lower. Next, Jeremy from Financial Education analyzes numbers and goes behind the numbers and explains why the stock is falling so much. Jeremy calls this PayPal drop a massive overreaction in the market and says that these were not disastrous earnings by any stretch of imagination. Looking at the income statement, balance sheet, cash flows, everything is extremely impressive and is just going to get stronger for PayPal over the coming years. In Jeremy's opinion, PayPal is a beast of a company. Jeremy feels that the stock is easy money over the coming years, claiming that he's bought PayPal very heavily and will definitely be buying more. Next one is Enphase Energy, ticker symbol ENPH. It seems that Enphase has found its bottom and is trying to bounce back. Now Enphase is trading at about $145 per share. TipRanks analysts see about 53% upside potential over the next 12 months for Enphase stock. Colin from the Investor channel has uploaded a whole video on this stock where he runs through recent earnings, overviews some news, and talks from a technical perspective. In his opinion, Enphase is a very strong company, fundamentally looking great. It has strong cash flows, strong profitability, and strong gross margins. In terms of technical perspective, Colin likes that downtrend is over, at least temporarily. Overall, Colin doesn't mind the stock. He doesn't think it's wildly undervalued, but he likes this clean energy play. Unrivaled Investing again, and this time Daniel talks about Enphase business model, looks over key numbers and much more. Daniel thinks Enphase has many attributes of a dream investing: hypergrowth, strong margins, significant free cash flow, clean balance sheet, and strong secular tailwinds. In his opinion, if Enphase continues to execute, it will be tough for investors to have incredibly compelling return in the years ahead if there is any form of multi-contraction. So, Enphase bulls need to believe a greater than 35% annualized growth, greater than 22% operating margins, and more than 30 times N multiple in order to get nice upside over the next few years. And that's tough for Daniel for now, but maybe management can pull it off. Overall, he's very impressed by the tone of management, how they've executed so far, and how incredibly well the stock has done. However, Daniel feels less confident that in the next few years it could perform as well as it has over the last 5 years. Last but not least is Walt Disney, ticker symbol DIS. Disney is now trading at about $150 per share and has recently risen about 11%. TipRanks analysts see about 30% upside potential over the next 12 months for Disney stock. First, Tom from TipRanks. Tom overviews insane recent Disney earnings. Tom claims that this company seems like a very good deal right now, but Disney is not a perfect company because they are struggling with massive amount of debt. When they finally take care of this debt, then they're going to bring back the dividend. Tom thinks that this particular stock with these numbers and with everything that's going on with Disney Plus streaming service, it will really be taken over. Tom sees this as a $200 stock by the end of the year 2022 and predicts a massive run for the stock up ahead. Finally, a very detailed video on Disney by Colin, which analyzes Disney company from fundamentals and technical perspectives. Looking from fundamental perspective, Colin believes that earnings are really strong, investors love that Disney parks are coming back, and overall the company looks good. Looking from technical perspective, even though it's not lined up perfectly, and if we get rejected at $169, there can still be an opportunity to consolidate between 160 and 168 level. In his opinion, it would be very bullish for Disney if it breaks over 169 level, and that would trigger some momentum buying. These were our stock picks for the last 2 weeks. Hopefully it gives you an idea of the stocks that are getting the most attention at the moment, and if there's something that caught your attention, go and check the YouTube as mentioned for more detailed information. And see you in 2 weeks.